Hello and welcome to Property Hotline with me, Kavita Krishnan, on India's first property channel, Magicbricks Now. Now, finance is the most important element when it comes to buying a home. And unless you have the money sorted, you can't really go ahead with that deal. So, which is why today we'll be answering all your questions related to home finance so you can go ahead and finance your dream home. Joining me in the studio is our expert for the day, Harshil Mehta. Now, Harshil is the CEO at DHFL. Welcome to the show.
Thank you, Kavita.
Thank you so much for joining us. Let's take our first question. It comes in via email. Vivek has written in, and Harshil says that he wants to take a home loan for investment purpose. Now, the position in the project that he's buying into is expected post 3 years. He wants to know if the EMI will begin on the first day of availing the loan. Can he also opt for a pre-EMI option? That's an interesting question, and well, I know the EMI clock starts ticking on day one. I'll let you answer that. So why don't you answer Vivek's question first and then discuss what exactly is pre-EMI?
Yeah, sure. Hi, Vivek. Looking at your question, you have finally taken a decision to buy a house of your own. So firstly, congratulations on that. Now, any property which you buy, there are two parts to it. One is either they are fully complete, so which are typically a builder purchase which is complete, or a resale transaction. Now, if you buy a property which is under construction, which means let's say it's going to take another 2.5, 3 years for construction to happen, then the disbursements which will happen would be as per the stage of construction. Now, in that scenario, the loan is not fully disbursed. So what you will do is whatever part disbursements happen, those you pay interest only on that part, which is called as pre-EMI. So what will happen is during the course of the construction of the house, of the apartment, you will end up only paying interest on all those part disbursements. However, there is also another option which is available, which is called as EMI under construction. In that, what happens is, instead of just paying the interest, it is calculated as an EMI. So your EMI actually starts from day one. Not many institutions offer that. However, I must put that as a caveat. But you do have that option. And the benefit of that option is part of the EMI also goes towards your principal amount, and part goes towards the interest.
So tell me this, Harshil, in cases where you don't have the option, like you said, of paying both principal and interest in the initial stages, that is when the building is under construction, and say the construction stops or the building position gets delayed, then what happens? So it's just 3 years. If say you were to get possession after 5 years, do you continue paying interest till then?
Yes, absolutely. That's one of the aspects one has to see. Those are also some amount of, I would say, the construction risk which you take. Because what happens is if the construction gets delayed, there is some amount of money which has already been disbursed, and interest meter starts from day one. There is no bank holiday for that. Right. They don't even have a second and a fourth Saturday off. You have to pay interest. So interest meter starts, and you have to keep on paying till the loan is fully disbursed. After the loan is fully disbursed, your EMI starts.
Right. So Vivek, that's your answer there. Your interest is not going to take holidays. The meter is going to start ticking from day one, and which also means that it's better when you are opting for a home loan that you go for one where you can pay off both the principal and the interest from day one. That way you will have a shorter repayment period. Right. Let's move on. Ashwin Shetty has written in now an email. He says his take-home salary is 77,000 rupees. He's paying 7,000 rupees per month on a car loan. He wants to obtain another loan to buy a property and wants to know if he can obtain one from SBI. Now, that is something that SBI will have to answer. What we can tell you is if a bank or a finance company like Harshil's will be willing to give you a loan. What do you say, Harshil?
Yes, absolutely. Anybody would give, any bank or housing finance company for that matter would give you a loan. But again, couple of things you need to keep in mind is if you are already running a loan, then your repayment track record on that existing loan is very important because any lending institution is first going to look at whether you have any obligations And if you have any obligations, how is the repayment track record with respect to that loan? So that is the first aspect. Second is, yes, you are eligible for a loan. As a thumb rule, I can say that whatever is your take home, you can multiply it by about 50 times. That becomes your eligibility. So in this case, he's saying a salary of 77,000. Take out 7,000 rupees for your car loan, you have 70,000 with you. About 35 lakh of home loan is what a ballpark would say. Then, of course, there are various other things. If your spouse is working, you add the income. If your credit repayments are good, then it supports further. But this is a ballpark range, yes.
You told us how to calculate loan eligibility. Now, tell me this. Going by what Ashwin has written in, 77,000 salary, 7,000 is going for a car loan EMI. How do I actually gauge whether or not I'll be capable of paying back that home loan? When I'm saying capable, is, how do I really plan my finances? Is there a thumb rule for that as well?
Yes. First and the most easiest, I will say the most easiest of them is, most of the bank and the housing finance companies' websites have calculators. So that becomes very easy. In fact, if you go to our DHFL website, there you have calculators which are available, which will also give you scenarios depending on various interest rates. So it actually tells you, if there are advanced calculators where you can also say what are your expenses, and it will throw up that where on an approximate ballpark range would be your eligibility for the loan.
Right. So those EMI calculators that you see on bank and housing finance websites are there for a reason. Do not ignore them. Don't just look at your EMI, your loan eligibility. Also look at your payment capability and whether or not you'll be able to repay that loan comfortably. Right. Let's move on. We have more email queries coming in. Now Amrut has written in. He says that he's bought a home with a home loan of 21 lakh rupees. He wants suggestions for few good policies for insuring his home loan liability. He's looking for a low annual premium and preferably a no-frills policy. So Amrut is clearly thinking long-term here. What would you say?
Amrut, I must congratulate you firstly for really thinking long-term and also recognizing the fact that there is a debt which you are taking which needs to be repaid. And most of the banks or housing finance companies from whom you take loan has a product which is called as an embedded product, which is MRTA life insurance. This is a product which is specifically made for home loan customers like you. And this is called as mortgage reducing term assurance, which is MRTA. How it works is when you take the home loan, you take this insurance along with the home loan, which means that the insurance is protected for the home loan amount. And this insurance stays with the loan as long as the loan is to be paid, which means if you have taken a 15-year loan, the insurance will cover throughout the 15-year, which means that you are covered in an uneventful situation. Then your home loan is completely protected by that insurance, as a result of which the liability in an unevent, it does not come onto the family. And yes, there are various insurance policies which are available even in the market, but most of the time it is advisable to go with the home loan because it's your own home loan company which in an event like that can do the entire processing.
Right. But say I did not take an insurance policy when I bought that home loan. And now, say 3 or 5 years into paying that home loan, I think that I should probably get an insurance policy. Is it possible?
Sure, absolutely. All you have to do is get back to your housing finance company or bank and say, look, I would like to have an MRTA insurance along with this. And you can, of course.
Will it get cheaper if I paid off a part of the home
loan?
Yes,
because the premiums are calculated on the amount. So
right.
If your amount comes down, and you can always plan it. If you are expecting some investments maturing, so you can say that, okay, I need only coverage for this much, and you can cover it.
Okay. So plan your investments and ensure your repayment capabilities. Also, moving on, our next query comes in from Avanti. Now, Avanti is planning to buy a house. She'll avail a loan for the same. Her yearly income is 3.5 lakh rupees. Avanti wants to know how much loan is she eligible for. She also wants to know whether it's better to go for a home loan with a lower base rate or with a lower margin. That's a very nice question. So let's tackle the home loan eligibility, which you've already kind of answered earlier.
See, again, on the loan eligibility side, again, I would recommend you have those calculators available. But again, 3.5 lakhs, you again divide by 12, you get your monthly income, multiply it by 50. That's a ballpark range which you will get as a loan eligibility. The second question is with respect to the base rate or with a margin.
There are a lot of these terms that you bankers throw at us. Spread, margin, base rate, interest rate, RPLR. Please, now that you're here in the hot seat, just explain it to us.
See, ultimately, all this are nothing but which tells you what determines your interest rate. Okay. In case of banks, it is base rate. In case of housing finance companies, it's prime lending rate. Typically, they call it retail prime lending rate, which is a rate. And then there is a margin, which means that, this is the rate I'm going to give you a margin, and this is your end rate. Now, banks use a base rate, so there will always be base rate plus, because base rate by itself says that you cannot go below this rate.
Right.
Whereas in case of housing finance companies, there is usually this prime lending rate, which means that this is the highest rate. So you typically have a margin which is minus, which gives you a rate. Now, specifically answering to your question is, base rate or prime lending rate. Ultimately, it is a margin. In any case, wherever you have a higher margin, means that your end rate in case of a prime lending rate becomes lower. In case of a base rate, you want a lower margin because that is what they add up. So in a base rate, if it is base rate plus 50 basis points, then your end rate is lower compared to 100 basis points.
So you're saying with a bank, I should look for a lower margin, and with a housing finance company, I should look for a higher margin.
Yes.
Is that?
Yes, absolutely.
So that's the formula. That's the magic formula. You've got it from a banker. For a bank, look at it with look for a lower margin, and for a housing finance company, look for a higher margin, and that way you will end up making a better decision with your home loan. Right?
Absolutely right.
Let's move on. We have a Facebook query that's come in now. Vicky says that his wife and both of them plan to buy a property in Bengaluru. They plan on taking a loan. Now, Vicky's Sybil score is 570. His wife's score is 810. His wife will be the primary applicant for the home loan, I'm guessing because of a higher score. He wants to know whether his score will affect the loan process. Will the bank deny him the loan if he is a co-applicant?
Well, Vicky, for starters, first, it is good to know that you are looking at Sybil scores. But let me tell you at the same time that Sybil score is not the only criteria for taking a loan. Yes, of course, it does matter in a decision making, but there are various other aspects which are also looked at when we do credit underwriting of a customer who is looking for a loan. Sybil is more like, I would say, a report which says what is the status of the loan repayments which a customer has taken, but it's not the only aspects. Apart from that, there are various other things institution looks at, which is your income eligibility, what are your other obligations, what kind of occupation you have, because there are many occupations where there is a high risk of employment at a later stage. So various factors actually go into this entire thing. So it's not just the Sybil. Yes, Sybil does have a role to play, but it's not the only role which comes into the picture.
Okay. Also, demystify Sybil score for us. A lot of our viewers are very scared of this one little number. So tell us, what all does a Sybil score cover? Obviously, you said repayment. So what does it cover? Just your loans or your credit cards, your mobile bills? Does it cover everything? What all does it cover?
See, Sybil as it stands today, it only covers loans and credit cards. You know, there are a lot of thoughts going on around how we can, you know, add various other aspects like your utility bill payments or your mobile telephone bill payments and all that, because then overall it will give the repayment ability and intentions of people who are using this.
What is a good Sybil score?
There is nothing like a good Sybil score.
Okay, what Sybil score are you safe with when you lend? What Sybil score makes you happy?
See, any score over 500 is something one would start looking at a case. You know,
he's got a good score in that
you know,
case.
That's really not too much. But it then depends, because there are also many times, I must put a caveat here, that there have been instances where Sybil scores have got, because of credit cards.
Okay.
And there have been situations where credit cards, where a lot of it were unsolicited. So you really have to dig deeper into that to see what is a better score.
So essentially, anything above 500 means you're in the safe zone as far as the Sybil score is concerned. Now we have a lot of email queries coming in today, Harshil. Deepak has written in and he says that he's taken a home loan of 10.5 lakh rupees at an interest of 9.65% from HDFC 2 months back. The property is in Baroda. The loan tenure is 25 years. He wants to pay the full loan within a week. I'm sure you like a customer like that. So he wants to know, if he clears the entire loan in 1 week, how much interest will he have to pay?
No, as a lender, Kavita, let me tell you, I'm not going to like this, because because, you know,
your money is earning extra money.
Okay. Exactly. But okay, jokes apart. But well, yeah, he can go and prepay the loan. The only thing one needs to keep in mind here is many organizations do have a lock-in period. You know, some organizations do not allow you to repay the loan, you know, part repay or full closure, maybe for first 6 months or so, you know, and it differs from organization to organization.
Okay.
So in this scenario, you know, you may want to go back and check what your sanction letter says. See, typically all these conditions would be there in a sanction letter, or it would be in something which is called as most important terms and conditions. It would be mentioned over there, or you can just call up that institution and check with them.
Okay, so get in touch with the institution, check with them, or read through your sanction letter. That will tell you whether or not you'll have to pay a penalty, or whether there is a lock-in period within which you cannot repay the entire loan. Okay, let's move on. I'm told we have a caller on the line. Abhishek has called in. Abhishek?
Hey, hi. Yeah.
Yeah, tell us what's your question.
Yeah. So I have recently, last week, I have booked a project in Pune. It's in Baudan. The project is from Goel Ganga Group.
Okay.
And the project name is Ganga Legend. So I have bought it's a 1 BHK. It's 680 square feet. That's the area. And they have given me the price at 51 lakhs. So what scheme, I have already opted a loan from PNB Bank. So they were the channel partner. So what they have done is, for 1 year, they are telling me that you don't have to pay any pre-EMI interest for 1 year. After 1 year, that is in January 2017, my actual principal and my EMI interest rate would actually get deducted every month. And I'll get the possession in June 2018. So I have to bear the interest for 18 to 19 months. So I want to know, is it like I have invested in the right place? And I have never been through this plan. I mean, this is a scheme which...
See, we have, you've called in today. We are answering home finance queries today. We have a banker in the studio. What he can tell you is whether you've got into the right scheme. Now, Abhishek, the scheme that Abhishek is talking of is pretty common in the real estate market these days, and they come in different, different guises in that sense. What would you say?
Yes, Kavita, you are right. See, Abhishek, what you are talking about is what they call it as a subvention program. You know, it's something like that: pay 10% now, and 10 on possession and balance, and so on and so forth. So what happens in this scenario is, the time frame which you are talking about, the disbursements will happen, okay, as per the stage of construction. The pre-EMI interest, if you have been in the show, the earlier part we talked about pre-EMI. The pre-EMI interest is something which now your builder is saying that he's going to pay. But remember one thing very clearly, as far as the lender is concerned, they have given the home loan to you and not to the builder. In a situation, if the builder does not pay the interest, then remember one thing, you are ultimately responsible for making that payment, because every such payment which comes, or if it does not come, either way it also gets reflected in your Sybil scores, and the loan is given to you. It's a different thing that the builder is subventing and paying the interest. So one of the most important things here is always to ensure that the builder with whom you are going ahead and doing the transaction has the right credentials to honor those kind of commitments. Overall, this scheme, as far as the scheme is concerned, those schemes are definitely good. They are in the interest of the consumers like you, as long as it works well.
Right. So essentially what the developer is doing is he's giving you a discount, though he's not giving you a discount on the table, upfront. He's just telling you that I'll pay the interest, which means he's given you that much. You can take that as a discount that he's given you. However, like Harshil said, if the project were to be delayed for some reason, or it gets stuck, or the developer stops paying the EMIs, then you are the one who's going to be liable for it. So that is something that you need to think through and then get into a scheme like this. Now, Harshil, typically when you're getting into an under construction project, this is what you have a lot of these payment schemes. But then builders also tell you that you can buy without the scheme. Now, when you buy without the scheme, what would you suggest? Should buyers then opt for a construction linked plan because it's an under construction project?
See, when you buy without the scheme, then there is an upfront discount which comes to you.
Right.
Okay, and the only thing in that is the discount always assumes a particular construction time frame. So if it goes beyond that, then obviously the discount which you have got starts diminishing. So again, it boils down back to the same point on the credentials of the developer. But between the two, it's ultimately the buyer who has to decide which one he gets the benefit, where he sees happening.
But which is a safer one, according to you?
See, a safer one is, of course, you take the discount, because then you know what your liabilities are. And you are not dependent on a third party.
Somebody else paying your loan. Exactly. You should be paying your loan, not a third party. That is the basic of finance. Basic finance 101 in that sense. Let's move on. Rajan has written in through email. He says he's taken a loan from LIC at 11.75%. HDFC is offering him a loan at 8.95%. Is it advisable to transfer the loan? This is our favorite question. Switching loans. Should they, shouldn't they?
Is it firstly, let me say, is it 8.95 or 9.95? Because, maybe I would also rush in there to get a loan at 8.95. But yeah, let me, jokes apart, but clearly, yes. There are no exit barriers today for doing a balance transfer of the loan. And one of the things is, as customers become more financially aware, they start doing the calculations in terms of how it starts impacting their EMIs, either in terms of tenure or a lower EMI. Both of the things work. And yes, since there are no prepayment penalties applicable, if they get a better deal, they can move. But one of the things you need to also remember that when you take another fresh loan, there is another set of processing fees you need to pay, and so forth. So
you don't pay a penalty here, but you pay a fee over there.
Yeah, unless and until he still gets a better deal to say.
Okay, very quickly, we're running out of time. Tell us this: when should you actually do a balance transfer? In the beginning of your loan or towards the end? If you're at the end, should you do a balance transfer?
See, at the end, you are only what you are doing is your interest. Your principal amount has virtually become non-existent. So if you have to do it in the earlier phases, because the bulk
the first 5-10 years.
In the later part, in the first 5-10 years, you are paying hefty interest. So you would like to do it in the earlier phases, because your interest component starts coming down.
Do a balance transfer in the early phases of your home loan repayment cycle, right? With that, we are completely out of time on this edition of Property Hotline. Harshil Mehta, thank you very much for joining us.
Thank you, Kavita.
And we hope to see more of you in future on the show.
Sure. Thank you.
But on Friday, we'll be back to answer queries related to buying, selling, or investing in real estate. You know how to get your questions. You know how to send in your questions to us. You can write in on email, on Facebook. You can send in video queries now by sending them to to feedback@mbnow.in, and you can also write in on our website www.mbnow.in. Apart from that, you can tweet to me or call in live like the callers you saw on the show and get your questions answered. Right, thank you very much for tuning in. Keep watching Magicbricks Now.